The views and opinions expressed in this podcast do not necessarily reflect the views or positions of Acuma, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to Actors on Point Podcast, policy series, where we focus on policy issues impacting the credit union mortgage industry. I'm your host, Peter Benjamin. Before we go to our episode, just a quick word from our sponsor.
This episode is being brought to you by Loan Vision. Is your credit union looking to turn your accounting department into a profit driver? Loan Vision can help. Our platform delivers real-time data, loan-level insights, and automations to streamline workflows and improve control over financial performance. Transform your cost centers into revenue generators by equipping your team with the tools needed to better serve your members. And don't miss our monthly webinar series, where we share key strategies and best practices to help credit unions optimize their mortgage operations. Register today at www.loanvision.com under our upcoming events page.
Joining us today as our resident expert is Leah Dempsey, shareholder with Brownstein. Leah, how are you doing today?
I am doing well. I am in our Denver office, so it's a little bit earlier here, but I've been up since like 5 a.m. and it's sunny, nice day here, so everything's going well.
I mean, I'm sure it's probably a little bit cooler than it is here in the DC area. Temperatures are rising. It's gonna be close to 100 degrees today. And I think that's a good segue and a good almost analogy for the climate that's happening in DC right now. So to that point, let's dive into the latest and greatest that's happening in Washington. We have three great topics today. We have the CFPB, we have the reconciliation, and we have the Hobbs Act, which we're going to expand on. And this has been a topic that we talked about in the past in a different form, but we're going to dive into it a bit more. I think there's some things that happened in the past week that you're going to expand on. The attorney in you is going to most certainly dive into it for us. But let's start with the CFPB. What is happening with the CFPB? We'll call it I don't know if we want to call it the saga or the soap opera with the CFPB. I think they both play well, but what's happening with the CFPB?
Well, yeah, it's a busy time over there, and we've obviously been following since the beginning of the year when there's been lawsuits about changing the size of the staff. There was a nominee that was pulled, Jonathan McKernan, but despite a lot of a flurry of activity and different kind of changes happening through litigation and other avenues, they've kind of, I think, settled into some policy making finally, and they've been active, I think, in a very productive way for credit unions, and happy to talk a little bit more about that.
Let's dive into that a bit, because I think, obviously, the CFPB is, for all intents and purposes, outside of the NCUA, the largest regulator that credit unions have. And if you really think about it, if we peel back the layers a bit, most credit unions almost fear that point in time when they kind of break over that $10 billion deposit threshold. They start ramping up staff. They start really doubling down on compliance. They start questioning or asking a lot of questions from other credit unions or peer groups about what it's like being under the CFPB's purview. Now, does that change now that we're in this new era of CFPB oversight or makeup of the CFPB in this new administration? I don't necessarily know if I can call it new administration anymore since we're halfway through the first year. But I think it's important for us to dive in a bit more because it does impact credit unions significantly. So if you could, let's dive in a bit.
Sure. Well, that's a great point and a great question. Some of what we've seen early on in the CFPB when Mark Calabria and his team kind of took over as detailees from the OMB is, first really addressing a lot of the rulemakings and lawsuits that were kind of an overhang from the Biden administration. They've pretty much gone through that list for the most part. They've addressed credit card late fees. They addressed overdraft. They are in the middle of litigation addressing the medical debt credit reporting piece that we've talked about many times on the podcast. And now at this point, we're starting to see some proactive policymaking. We have seen multiple things noticed in the Federal Register in recent weeks. They submitted to OIRA for review some of the mortgage rules, and we're not 100% sure what that's going to entail yet, but it seems to indicate that the CFPB is moving towards reopening and re-examining some of the regulations from the past decade plus. The mortgage rules, as most listeners on this podcast know, were some of the first rules that the CFPB worked on. Some of that was because they statutorily had timelines where they had to. So I very much expect that over the next several months, we're going to continue to see changes and deregulatory efforts. The CFPB is also, I believe, going to be looking at things like the complaint database. They mentioned that in their withdrawal of the guidance pieces that they were going to withdraw the consumer narratives related to the complaint database, and potentially the fact that it's public in general. For credit unions, the complaints at NCUA are received by the agency, but not made publicly available. And that, I think credit unions would argue, works well in identifying bad actors without having the many problems that are associated with a complaint database that is public, where people look at certain products or services and they think, for instance, I'll talk about debt collection. That's an area where there's always a significant number of complaints. Many of those complaints are not complaints; they're inquiries, because people are trying to learn more about what is happening with that account. A lot of them in recent months have been generated by AI and credit repair organizations. So there's a lot of problems, a lot of issues, and it's something that the industry has been flagging for a long time. There seems to be some appetite under the CFPB to finally address maybe some of those concerns that credit unions have.
I do have it's kind of a random question. With the trigger leads bill that's kind of moving through the Hill, right? Would oversight of that fall back on the CFPB?
I don't believe that that legislation provides any additional oversight to the CFPB that I'm aware of, but it's a timely question because that bill is listed this week as something that could be considered on the House floor. Not clear whether it's gonna they're gonna get to that or not. They have a lot on their plate this week, but it's it's legislation that this Congress has been moving much quicker than we've seen it in any other Congresses, and seems to be some bipartisan support on that issue. So that could be something that we see in the next few weeks actually moving forward.
Because if I know I'm catching you off guard, and I know this wasn't part of our list of things we wanted to talk about, but I mean, I know that it's on the plate, and I know it's moving through the House, and it's already gone through the Senate, and it's already gone through, obviously, the House Financial Services Committee. But while we were talking about everything that's happening with the CFPB, that was one question I did have was, okay, well, who's really going to be monitoring the trigger leads bill? I guess it could be the FCC, right? Or it really could be the CFPB.
Yeah, and you know what? To clarify your point, so the CFPB does have jurisdiction over the Fair Credit Reporting Act. So, they oversee the implementation of any regulations related to the Fair Credit Reporting Act, and they have enforcement authority over the Fair Credit Reporting Act. So to that extent, it would fall under the CFPB's jurisdiction. My point was just that it didn't necessarily give them any new authorities in that area or call for any type of rulemaking or anything like that.
Okay. Good deal. Good deal. All right. So moving on past the CFPB, thank you very much for updating us on that. Again, this is, I don't want to call it a moving target, but there's still a lot unraveling with the CFPB. And I guess one final question on that, with us heading into the July 4th, holiday, and really I don't want to call it a summer break, because you never know what's going to happen, in the next few weeks, especially with things that have recently transpired in the Middle East. But whether or not the Hill is going to be working, or whether or not they're going to be taking a break, is there any possibility that the CFPB really sees any type of director change, or anyone is pushed forward in that between now and, we'll say, late fall, early winter? Or is it, we're just going to assume that, kind of Calabria is going to be in that role temporarily, or as we're just assuming that he's just the temporary director for the time being?
That's a great question. And I will tell you personally, I would love to see Dr. Calabria stay over there. Unfortunately, I do not get a vote in the Senate, but I think he's doing a fantastic job, and someone who really has great experience in these issues. But I think it really could go either way. I haven't necessarily heard, there's been some articles that different names have been floated. There is precedent for leaving an acting director in a position for quite a while, and then at some point, Director Vaught, I believe there's a time period for when he can be an acting director. So at some point, they would have to switch it to another Senate confirmed Republican to be the acting director, and that person could pretty much do the same thing if they wanted to, and have the OMB detailees stay in that role. Or they could nominate someone, and they could move forward with that process. It really isn't totally clear yet. And I think, to your point, with just everything going on with the Middle East and everything going on with the big, beautiful bill and reconciliation, it's probably not top of the list for President Trump himself, even though to us in the financial services industry, this is like a number one issue.
I mean, it is a number one issue, but you hinted at a couple things, right? It's the big, beautiful bill, reconciliation, the Middle East. All these things have the possibility of impacting our day to day in the financial services industry, right? Historically speaking, a war in the Middle East has potential to drive down interest rates. No one wants a war in the Middle East. No one wants lives lost, but it's one, you have to question what's going to happen with the priorities of the BBB and the reconciliation and the priorities of this administration now that we are entering into a wartime. But we're not here to talk about that. We're not here to debate wartime United States. We're here to talk about CFPB, reconciliation, and the Hobbs Act. So let's move forward with the one big beautiful bill and reconciliation. So what is, again, this is an interesting dialogue. It kind of bring us up to speed on everything that's happening with reconciliation, if you could.
Sure. Well, there's a lot going on. There's a lot of moving pieces. Late last week, the Senate parliamentarian started taking a closer look at several pieces of the bill, including the Senate banking provisions, and did strike down a number of provisions. I think most notably to us on this podcast is that Senator Tim Scott, the Senate banking chairman, attempted to zero out the funding of the CFPB. And the parliamentarian basically said that's not going to pass muster for the bird bath. and struck that. Also struck a provision that would have transferred the Public Company Accounting Oversight Board back to this Securities and Exchange Commission, and also a section related to pay of Federal Reserve staff. So this was kind of seen as a blow to Senate Republicans on the Banking Committee, that they, a number of these provisions were struck down. I know that they're, as of today, taking a look with fresh eyes of where cuts may be able to be made that do pass muster of the bird bath. There is a section related to 1071 that passed through the parliamentarians' tests for the bird bath. So I think by the end of the week, we will have more clarity. They are trying to get things done by the 4th of July. That's been the Trump administration's stated goal. There's a lot of pressure on the Senate and the House to do that, but it's starting to, particularly after some of these things were struck down late last week, it's starting to look a little bit more questionable whether that time frame is going to be workable. But there's a lot of pressure to get this done as soon as possible. Like you said earlier on in the podcast, we're halfway through the first year. Time is really ticking away at this Congress, and they really kind of need to get this done.
Yeah, I mean, but not only that, I mean, that timeline was also not factoring in, again, some recent developments, right?
Exactly. Yeah. Although I think some of them could have been, I think there was a thought process that there was probably a 50% chance of some of these making it through. And I think Senate Banking Chair Scott kind of swung for the fences, knowing it might be a tough uphill battle on some of these, but that was the approach he took. So people are surprised, but not shocked, and probably very likely have a plan B pretty much lined up to go pretty quickly.
All right. So I'm looking at my calendar. Here we are, roughly, when we are recording this, we are approximately 2 weeks out from the 4th of July. And if it's not done by the 4th of July, do they just go home, or do they stay till it's done?
I think the threat is they stay until it's done, which is a big motivator, because I think all of us like to take the 4th of July off. And
no one wants to be in DC on the 4th of July. I mean, it is insane.
It is 100 million degrees. There's
2 billion people downtown.
So it's a pretty good motivator.
Yeah. Okay. Yeah. Okay. I get it. So no one wants to be there. It's humid. It's miserable temperature. And yes, everyone flocks to DC for the fireworks on the National Mall. So yeah, it's you have to do it at least once in your life. But yeah, still. Okay. So, anything else on reconciliation, or do you want to move on to the Hobbs Act?
I mean, there's a lot, but let's just move on for now and see where we are.
Okay, I'm sure reconciliation, I hate to say it, but we'll probably talk about it next podcast.
Yeah. You said it, not me.
I put it out into the universe. All right, so what's going on with the Hobbs Act? And if you could provide a quick 2-second history of the Hobbs Act and how it relates to, somewhat recent events.
Sure. Yeah. And so the Hobbs Act is a special law that is related to final agency orders that only applies to certain agencies. And so some of the agencies that it applies to are the Federal Communications Commission, the Department of Housing and Urban Development, Department of Agriculture, Department of Transportation, and then a few others. So it's kind of a select few agencies that it applies to. And the reason that this is relevant is when we saw the Loper decision last year that really changed the way that agency regulations were considered by courts.
And when you say the Loper decision, you're referring to Chevron, right?
Yeah. Yes. Yeah. So the Chevron line of cases and the big decision that we got last summer that basically said, previously that if a statute or a law was unclear, there was deference to agencies to interpret that. And Loper struck that down. And since then, agency interpretations have been given less weight, which really aligns with a lot of the work of the Supreme Court and now at this point, the Trump administration and DOJ. So been a big effort on that front over the last year. So this case that came down from the Supreme Court last week dealt with, it was a TCPA related case that dealt with the Hobbs Act, and really a similar question to the Chevron Loper line of cases, where it looked at some of the FCC's orders related to the TCPA and how the weight that they were given by the court. Essentially, it came to the same conclusion as Loper, saying that even with the Hobbs Act, the FCC isn't given any special deference for its orders. And so that if you go to court and you're relying on an FCC, for instance, TCPA order, the court can weight that less than it has been previously, which really is kind of a big deal because there are a number of FCC orders related to the TCPA, which impacts credit unions and the calls that they are making, the calls and texts that they are making to members. As we've talked about many times, there's a lot of litigation on the TCPA and credit union world. There's a lot of class actions, even with some of the improved precedent that was out there. We still continue to see cases on this. Well, here we are now. We have the Supreme Court saying, if you're relying on something like what the FCC said about prior express consent, the court may or may not give that as much weight as they did prior to this decision. So we don't know exactly yet what that means. We don't know what courts are going to say, but we know that the plaintiffs' bar loves the TCPA and loves to come up with new legal theories to get those $500 per call damages and to bring class actions where you can make a ton of money as a plaintiff's attorney. And this potentially throws a wrench into what was what kind of was a clearer landscape for following the TCPA after the Facebook decision from the Supreme Court. We now have this decision, which we think will probably prompt some challenges at the district court level, which may we don't know exactly how they're going to come down, but may create a new patchwork of different types of decisions related to things like consent that could vary depending on which court you are in around the country, which is a problem, as you know, if you're a credit union, if you're Navy Federal, for instance, and you have branches in every state in the country, and courts come down on this issue differently in different circuits, it's pretty hard to develop a compliance program about consent that takes into account all those different decisions. So very new, just came out on Friday. We're not sure where this will lead yet, but we think it could open a can of worms. And as I mentioned, also relevant to Acumen members is that HUD is also covered by this. So even though the case was specific to the FCC and the TCPA, it creates precedent for HUD regulations as well. So that, similarly could open a number of issues that we may not even be thinking about yet.
Well, I mean, it's not just that. You mentioned USDA, right? So I mean that we originate USDA loans all the time. So at least our industry does. So I mean it's you reference FCC, HUD, and USDA, all of which have potential to impact housing. So it is very interesting to see how these types of laws have the potential to have long-standing repercussions on our industry and how we go about our day-to-day. So it's very fascinating. It's how it just all unravels. so quickly.
And I would say maybe just on the flip side of that, there may be some upside as well when, in the Biden administration, the chairwoman of the FCC was not a fan of necessarily industry arguments related to the TCPA. So arguably she could have put out a TCPA order that was really problematic for callers and for credit unions. She didn't do that, but a future FCC could do that. Someone that's more aligned with like the NCLCs of the world. So I guess in that regard, there's a little bit of a protection for the business industry that, an FCC chairperson that wants to make life more difficult for business can't do that as easily. But, kind of like we talked about with the Loper decision and the Chevron decision, there's upsides and downsides to these decisions.
Okay, good deal. And before we close out, is there anything else that you want to hit?
I think those are the big things. We will see what happens before the 4th of July. I'm looking forward to reconciliation wrapping up and, honestly, the stablecoin legislation, that debate may be wrapping up this week. They're really pushing to move the Genius Act forward. Trump called for that. That issue does impact credit unions, but it's not like their number one issue. So I'm kind of looking forward to when we get past those two areas of the House Financial Services Committee and then maybe digging into more of the housing issues and the consumer finance issues that may be of more interest to us and really credit union world once we get into the second half of the year.
Okay, awesome. Well, Leah, as always, thank you very much for your time. It's always great talking to you, and to everyone over at Brownstein, we appreciate your support and always educating the Acumen community.
Thank you.
And to close out, thank you again to Loan Vision for sponsoring today's episode. And to all of you, we know your time is valuable. Thank you for tuning in to the latest episode of Actors on Point podcast. We hope you enjoyed it. Until next time, be well, my friends.
Thanks for listening. We'll see you next time at the Acuma On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org. And to get the latest updates, head over to our LinkedIn page.